Hi everyone! Today we're talking about different types of business organizations, and I'm your instructor, Brandy. We're going to be talking about 3 different types of business organizations. The first is a proprietorship, the second a partnership, and the third a corporation. The first type, a proprietorship, only has one owner. A proprietorship comes about by just starting doing business by yourself. For example, if you wanted to start a bookkeeping company after you finish this accounting course, you could just start doing books for different companies and you would be a proprietorship. You don't have to do anything to set up your proprietorship, just the fact that you're doing business makes you a business. A proprietorship is linked to the owner or to the proprietor, which is the owner's name, and this means that the owner has unlimited liability. Unlimited liability means that if someone was to sue the proprietorship, that means they're actually suing you. That means they could go after your house and your car and any other assets that you have personally. Because the proprietorship is linked to the owner, it also has a limited lifespan. If you guys watch Shark Tank or Dragon's Den, you know about Kevin O'Leary's hit by a bus factor. This means that if the owner was hit by a bus tomorrow, the proprietorship would cease to exist because the proprietor's life ceased to exist. Another positive aspect about running a proprietorship is that it takes limited organizational costs. There is no separate tax return to do. You just do your own personal tax return and put your business income on it. The second type of organization is a partnership. Partnerships at least have 2 owners, but can have many more. An example of a giant partnership would be an accounting firm such as Ernst & Young or Deloitte or KPMG. These accounting firms have thousands and thousands of employees, but they still operate as partnerships. The partners in a partnership generally have unlimited liability, which again means that if someone is suing the partnership, they are suing the partners, unless they have an LLP status. And LLP stands for Limited Liability Partnership. Under a limited liability partnership, all the partners except one have limited liability. Limited liability means that the partners are only on the hook for what they've invested into the partnership. So for example, if you invested $5,000 into a partnership and someone was going to sue the partnership, only your $5,000 would be up for grabs in a lawsuit. It's a good idea to have a partnership agreement no matter how small or large your partnership is, and a partnership agreement would go over things like who gets the profits, who gets the losses, who gets taxed on what happens if you have a disagreement. How are you going to settle that? The last type of business organization is a corporation. And how corporations work is when the corporation is set up, the corporation issues shares and people buy shares. Whoever owns a share owns a piece of the corporation. There could be one owner owning all the shares of the corporation, or there could be millions and millions of owners. Because of how corporations are structured with shares, corporations have an indefinite life. So when a shareholder of the corporation dies, the corporation still goes on, but the shares are passed on to someone else. Again, because of how the corporation is set up, shareholders have limited liability. Again, this means that if the corporation is sued, only what the shareholders have invested into the company is up for grabs. The corporation is considered a separate person in the eyes of the law, which means that it can enter into contracts. It also means that it has to do a separate tax return. So the corporation has to file a tax return, and then the shareholders, when they get money from the corporation, they also have to file a tax return. This means that it's more work to operate a corporation. So now if someone was to ask you, how should I set up my business? You should be able to answer them. Thanks for watching.